Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Tuesday the 1st of April. The chart I'm going to look at now is gold, and this is my final chart of the day, and the gold chart continues to correct. It's now back below the 50% retracement of that big bull run that we saw in the first few months of the year, and that retracement was at 1288. You're also back below the 144-day moving average, which is currently around 1285.50, and these levels are being tested seriously now. The other support that it's testing is this reaction high from January, which formed actually the basis of the right hand shoulder of the head and shoulders reversal pattern. That comes in at 1278.01. Now the textbooks will probably say that you've got a slanting neckline, slanting neckline of that base pattern, but certainly you would argue that that is a key support, 78.01, that needs to stay intact. The overnight low, the weakness that can continue down, hit 1278.34 and bounced a little bit, so you'd certainly argue that there is support around there. Now, I'm not going to say that this 144-day moving average has been broken, because it certainly is a basis of support, and you'd argue that anything around there is still a basis of support, and you're actually back above it in early hours today anyway. On the intraday chart, you'll still see, I'll zoom out, you've got this downtrend that's in place, but you're now actually using it as the basis of support slightly. So there are signs, I said this yesterday, there are still signs that this could be beginning to form some sort of basis of a pattern reversal here. So I'm not going to get overly excited about it, but I'm just going to keep it in the back of my mind, because I still think that at some stage you've got all these key levels on the daily chart that are going to be coming in now, of the 144-day moving average, the 50% retracement, and also the neckline support. So you're beginning to see some excuses for some support to come in, and certainly you've broken this downtrend. So that the acceleration, or the speed of the downtrend is not as great as it once was, and certainly you're beginning to consider that some sort of recovery might start to come in place. You've had a crossover of the MACD lines and also stochastics, so that's been inducing of some support. So we're going to start. If we can get back above this 1289.79, or around about that 1290 level, then we can start to think about pushing back above this 55-hour moving average, which has been been holding back the advance in the last few days, and it could begin to look higher. But certainly at the moment, we've still got to be playing this as a sell into rallies, because we are still in this downward phase that there's still showing key lower highs, the latest at 1296. 1298, and also the resistance around 1300. So up in the high 12,000. Sorry. Up in the high 1,290s, I think there is some resistance that comes in, and that is ultimately going to be the key levels that need to be broken to the upside. But at the moment, we're still selling into strength, but with a mind that there are some key levels on the daily chart that should be supportive ultimately for this gold price, and we'll start to think about whether these are going to act as a medium term to longer term support levels, which they could well do. So just be careful of that when you're selling into the strength. Just be careful for holding on to positions for too long. Anyway, I wish you good luck in your trading on gold today, and I will speak to you later. Thank you.